there's an expansion of liquidity. And so I'm watching that expansion of liquidity. It's continuing. I think it's going to continue into next year. You heard Powell say they're stopping QT. That means that at some point in the near future, that is going to flip to QE at some point. We don't know when, but I believe that we're just going to continue to see expansion of liquidity into next year. So that means to me that gold can still, it's not done yet, in my opinion, and it can still rise. And whether it gets to 5,000 or just around there, I mean, that would not surprise me at all. As far as Bitcoin's concerned, I fully expect Bitcoin to run to 150 to 180,000 toward the end of this year and into the beginning of next year, and probably into the 200 range.
Lavish, a seasoned hedge fund manager who allocates heavily to Bitcoin, draws a direct comparison between gold, humanity's historic store of value, and Bitcoin, the emerging institutional-grade digital collateral. His thesis is not emotional. It's rooted in the structural and economic realities shaping capital flows in a digitized, AI-driven global economy. Lavish frames Bitcoin as a superior asset due to its absolute scarcity, resistance to seizure, portability, and network integrity. Qualities that gold simply cannot match in a world where value, data, and settlement increasingly transcend borders. Yet Lavish also recognizes nuance, acknowledging gold's institutional acceptance while highlighting the accelerating shift toward Bitcoin's adoption by Wall Street and banks. This is not just an asset rotation, it's a systemic monetary evolution already unfolding in real time.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Full disclosure, I own way more Bitcoin as a percentage of my portfolio and my assets. I manage a portfolio of Bitcoin assets for my hedge fund. But look, gold and Bitcoin in the same sentence makes sense, and gold bugs should be pro Bitcoin and vice versa. Bitcoin to me is better. It's the ultimate asset, and it's ultimate because we're entering into a digital age. But why is Bitcoin trustworthy, and why should you have it in your portfolio? Well, first, it has absolute scarcity. Gold's the amount of gold moves up and down with the price. As price goes up, gold miners they just ramp up productivity, and so there's a limit there. I'm not going to diminish that, but it's just not the same. Gold is just going to continue to come out of the ground for the foreseeable future. We don't know how much. With Bitcoin, there's 21 million Bitcoin that are ever going to be made. Full stop. That's it. Period. That in 2035, there's going to be one left to mine. I mean, it's mind-boggling how there's no longer going to be full Bitcoin mined. So it's also portable and it's divisible. So try moving $1 billion of gold across the border. Nothing wrong with it, but you'd have to think about the logistics and costs required between security guards and trucks and boats and trains and planes or whatever you need to move all that gold to wherever it's got to be. With a Bitcoin, if you want to move $1 billion of Bitcoin, I could do it right now. If I had $1 billion, I could do it on the show in 10 minutes. By the time we're done, it would be done within 10 minutes and cost you just a few bucks. Bitcoin's unseizable. If you hold your own keys, then you can walk across any border and move anywhere around the world. As long as you have an internet connection, you have access to your Bitcoin. It can't just be seized at a border like gold or cash can. There's something called the network effect, Michelle, that most gold people don't understand and appreciate. And I didn't certainly appreciate it and understand it when I first got into Bitcoin. But Bitcoin, it uses the equivalent of 81 terawatt hours of energy, which is per year, which is the equivalent of over 20 full-scale nuclear reactors. That secures the network. That is what's securing the network of Bitcoin. So it's impenetrable. It's a fortress that it's nation state resistant. No state could just come in and say they want to change the code. It just can't happen. So they would be kicked off the network before they even got anywhere. So look, gold is time tested. It's institutional grade. Institutions have owned it and bought it. Central banks have owned and bought it for many years. It's bank approved, central bank approved, and it's really easy to understand. But Bitcoin is quickly gaining traction in Wall Street as a viable asset and collateral. And so that's something that we've seen that is developing real time. So now you've got JP Morgan, the same bank who is saying you've got to get in the debasement trade. They're putting together their structure so that by year end, if you're an institution, you're going to be able to borrow against your Bitcoin that you have with them. This is a massive, massive development that people are not talking about. It has to do with changes of legislation that occurred when Trump came in, that banks are no longer being sanctioned for dealing with crypto and Bitcoin companies. But now that you can take your Bitcoin and you can borrow against it in an institution, that this is where the institutionalization of Bitcoin is happening real time right in front of us. And so if you're somebody who owns gold, you really want to own some Bitcoin too. If I'm 100% wrong and you own a couple percent of Bitcoin, you're never going to miss it. But if I'm right, you're going to thank me because your portfolio is going to do far better than if you didn't have it.
Lavish explains the fundamental economic divergence between gold and Bitcoin: supply elasticity versus absolute scarcity. As gold prices rise, mining expands, its supply responds. Bitcoin's supply does not, capped permanently at 21 million coins, with nearly all issuance completed by 2035. This fixed supply, secured by a network consuming energy equivalent to over 20 nuclear reactors, makes Bitcoin the first truly unforgeable digital commodity. He emphasizes portability and seizure resistance, attributes that redefine capital sovereignty. Institutional adoption is accelerating. JP Morgan, once critical, is now preparing to lend against client Bitcoin holdings, unlocking Bitcoin as collateral inside the global banking system. This marks the beginning of Bitcoin's monetary integration, not a speculative phase. Yet Lavish notes volatility matters. Short-term capital or retirees may still prefer gold for stability, but for long-term investors in a digitizing economy, Bitcoin's asymmetric upside is unparalleled.
If you look past the past few months, you would say that gold is nowhere near as volatile as Bitcoin. In fact, the volatility of Bitcoin has been lower than gold recently, which is just incredible. But over the course of time, very few periods in the history of Bitcoin, the life of Bitcoin, has gold been more volatile than Bitcoin. So one of the reasons you might want to hold gold is that if you have short-term needs, that you want to keep your money invested in more than just a 4% yielding treasury, that you want to be able to get to it without the volatility of Bitcoin. Bitcoin's volatility may mean that you could see a 10, 20, 30% move in your asset in a very short period of time. But I can't make the case of gold over Bitcoin over a long period of time. So if you're older and you're retired and you want to be very careful with your money, and you just can't stand the volatility right now because you have short-term needs, it may not be right for you. It really depends on the individual. But if you're young and you've got a long timeline ahead of you, you've got a long runway ahead of you of investing, there's no reason for you to be, in my opinion, selling Bitcoin to have gold. But it's if you start getting worried about quantum computing, own both. I don't think there's anything wrong with that. Like I said, I personally own a whole lot more than Bitcoin, more Bitcoin than gold, but I've owned them both I've owned gold for many years. And once I learned about Bitcoin, once I really truly understood it, it changed my view of where this world is going. One of the reasons you may want to own Bitcoin too is that you understand that the digitization of the whole economy, of AI and the onset of AI, is there's going to be a need for layers of payments that are on what are known as the blockchains. And Bitcoin is the most trustworthy of all of them. And there's a lot of different transactions that are being built on the second layer of Bitcoin. And that is another reason to own Bitcoin, because that network is just going to continue to grow and get stronger and stronger in the future. And as it does, then the price of Bitcoin, each Bitcoin, will just go up, and eventually it'll be $1 million per coin, and then $10 million per coin, and who knows from there. But that's my very strong opinion. I've been studying this stuff for a long time, and I'm extremely confident in the future of Bitcoin itself.
Lavish closes with a simple portfolio logic. Gold and Bitcoin need not be adversaries. But ignoring Bitcoin is irresponsible. Gold remains valuable for stability, especially for conservative or short-time horizon investors. But for those with long runways, Bitcoin represents exponential potential as digital settlement layers build atop it. Institutional collateralization expands, and the network strengthens. He foresees Bitcoin exceeding $1 million per coin, potentially reaching $10 million as global monetary systems adjust. The future belongs to digital native value transfer, and Bitcoin, fortified by energy-backed security and decentralized governance, stands unmatched. Gold's role is historical, Bitcoin's role is generational. As Lavish argues, even a modest allocation can hedge against missing the greatest monetary transition of our era. The choice isn't gold or Bitcoin, it's understanding where capital flows when trust, scarcity, and technology converge. And according to Lavish, that future is unequivocally Bitcoin first.